Hi everyone, welcome to another episode of Crypto Tips. This guy's name is
Toby and Heidi. Gee, that was a ridiculous one. Anyways, let's keep going. All right, I got something cool to say.
My name's Heidi.
Yeah. Okay, 32 ETH only cost $6,400 last year. 1 year ago, okay? Now it's $128,000.
Yeah.
So guys, that at 7% you're making $9,000 a year. At 10,000 per ETH, you're making $24,000 a year. So like this is where this space is headed. I think that's why I think people are realizing that ETH is going to be sticking around regardless of whether or not these crazy high gas prices are here or not. Like ETH is going to stick around, and there's layer 2 solutions like Matic, like all these other things that are going to be helping out with the transaction fees and the speedy networks, but it takes time, and I have patience. I have lots of patience. Yeah. I mean, I've been in ETH forever, so
our patience has paid off so far. So.
Yeah, I don't care. Let everybody else complain. I'm fine. Whatever. Sit back, chill. I know that the fees are a lot, but you know what? There's other platforms that you guys can participate in.
If you want to know about the risks of DeFi and the difference between participating on things like PancakeSwap on the Binance chain and the DeFi ecosystem within Ethereum, check out the video that we posted just before this one, and you'll figure it out. And there's timestamps provided for each video, so you don't have to watch the whole thing if you don't want to. But you can if you want to, obviously. Okay, first question. This one's kind of long, but I think it's worth it. If the Bitcoin, so this was put forth by Dr. Daniel Kim. If the Bitcoin blockchain forks or splits into one inside China versus outside of China, what does that mean for the average Bitcoin holder? 2 versions of the accounting book or blockchain of Bitcoin, 1 version for China, another for everything else. Number 2, global computer power in Bitcoin is concentrated in China. Therefore, the Chinese version of the accounting book will add new pages of transactions or blocks at a faster rate than the non-Chinese version. Bear with me. At some point, connectivity between China and the rest of the world is restored. Whenever the global Bitcoin network is confronted with 2 versions of the accounting book, the Nakamoto white paper calls for the longer chain, the accounting book with more pages, to be considered authoritative. Now the question is, would this mean that all of the Bitcoin transactions after the disconnect from an exchange, paper wallet, or hardware wallet would disappear? There can only be one continuous blockchain. Bitcoin that have not been transacted during the disconnect would be safe until the connection is restored. Please give your thought on this. Okay, number 1, I feel like there's a lot of misunderstanding the way blockchains work. Number 1, basically what he's talking about is a contentious hard fork, is when if there was a split and there were 2 blockchains still forming, which has happened many times in Bitcoin. There's Bitcoin, Bitcoin Cash, Bitcoin
Diamond, Bitcoin Gold.
There's about 100 million. There's so many, and they all still exist. They don't stop existing because they're not in line with the Bitcoin blockchain. It's called a contentious hard fork because there is a certain number of people who will continue mining that new block at the time of the split. The only reason that it would stop, it wouldn't exist, is if no one was trying to mine that version of the code, basically. And that's the first issue to clear up, is that even if there was a contentious hard fork and there were 2 versions of it, number 1, you can't limit one is only inside China, because number 1, Bitcoin is open source. There is no, even though the majority of miners are in China, that doesn't mean that all of the nodes running are in China, and the nodes are actually do a lot to bring the consensus to the network as well. Also, they wouldn't, you can't have a hard fork and then come back. That doesn't happen. So this whole fear of like, if this were to happen, all of a sudden your coins would be gone if you were interacting with like the wrong chain. If it forks, and that's it. Because at that point you were working in completely 2 different blockchains. So I don't see this as a viable reality. If it was if there was a fork and there was all of a sudden one Bitcoin in China and one for the rest of the world,
Sweet.
pretty sure a lot of people would go for the one that was open and not in China. And although the mining is concentrated in China, that's not 100% of the mining power. There's miners for Bitcoin all over the world. So there's definitely enough to support another blockchain. There's thousands of different blockchains that exist, and they're not all owned in China. So there's a lot of FUD happening in here. It's really interesting. Yeah, just wanted to clear that up. Next question. Hi guys, my husband and I are retirees. Yes.
Congrats.
Yes, congratulations. You can teach old dogs new tricks sometimes. Toby, maybe there is still hope for your mom.
We'll see.
Well, as long as Toby's around, there's hope for his mom. She will be a no coiner at some point.
She's a coiner, even though she doesn't.
She doesn't know it.
I have a little savings for her.
Anyway, we are mostly hodling because we don't live off of crypto. So my question is, should we hold DOT, Ethereum, and ADA for the long term? Or will there be a time when they might go down a lot and not come back after the bear run?
That's a really big risk that you're willing to take. You know, the safest thing is Bitcoin.
Yeah.
After that, yeah, I'm going to, like, for instance, Heidi and I are probably not going to sell all of our ADA, our DOT, or Ethereum. So yeah, we're probably not going to sell all of them. And those are some of our top holdings. With that said, it's still a risk. The only thing that's not risky is Bitcoin, in my opinion.
Yeah.
A lot of people still see it as a risk because they say it's brand new, you know, it's only been around for 10 or 11 years or whatever. In my view, Bitcoin is not a risk at all.
Now.
That's 12 years now, sorry.
Anyway.
Horrible at math.
Okay.
So yeah, it's not a risk at all.
Yeah.
In my opinion. That's just me.
Yeah.
I viewed it as not even a risk back in 2012 and 13. I viewed it as
an opportunity.
A total safe haven place where I'm going to be fine in the long run, because I mean, guys, I rode that thing from $70 to $1,150 back down to $70.
Yeah.
And I didn't blink an eye. And I didn't have anybody encouraging me to stay into crypto because there was nobody talking about it on YouTube other than like one or two people back then. And, you know, that's just where I saw it. And so other people probably aren't as risky, I guess, or whatever. But I've really viewed it as like, this is the safest thing in the world, and I'm gonna continue getting it. So,
but this question of, or will there be a time when they might go down a lot and not come back after the bear run? That exactly is the risk involved with altcoins. That is exactly why if you're new into crypto, we say to give yourself a foundation of these solid cryptos first, so then if something does happen with these other altcoins, you have that to fall back on. Especially if you're holding and you're happy to hold long term because you don't need to live off of your crypto profits yet. It doesn't sound like you need to make these kind of risks. There's, like we said in the past video posted just before this one, is that there's still plenty of profit to be made for Bitcoin. You're not too late. You don't have to make these super risky investment decisions with a huge chunk of money, which number one is going to be very stressful for you. Number two, they are going to be hyper volatile, especially compared to something like Bitcoin. Again, not to say Bitcoin isn't going to be profitable, but to think that as a newcomer or someone who's kind of more passive in crypto, you're going to see these volatile movements and you're not going to know, you have a lot of pressure on yourself, basically, and the fact that, you would be able to time it perfectly is actually very rare, and time it to your benefit. Most people are mistiming the market. They're selling, they're buying high, selling low because they're following the trend, and you see it going in some way and you're trying to be steadfast, and then and then you buy it, and then that's when it switches. You are your own canary in the Bitcoin mine at that point. So basically, just know that for me, Ethereum and ADA are less risky. They've been around for a while. They're probably going to continue. DOT is very new. Toby is very bullish on DOT. Fair enough. He could very well be right, but in the back of my mind, it's new. So we'll see. And that's how me personally, I categorize most of our alts in that way. I am not like, oh yeah, I'll hold that one for 10 years, 5 years, 2 years even. Like someone's like, we'll see what happens. You're pretty much, a lot of the altcoins in my mind are on the chopping block. But that being said, us being in this bull market, you're going to be making profits. So you don't have to be like hyper micromanaging your altcoins.
And we're going to let everybody know on our Patreon.
Yeah, we say it all the time, guys.
Exactly what we're doing, when we sell, when we buy. It might get annoying because I do a lot of trade alerts and a lot of
pep talks.
Yeah, pep talks as well. Like when there was a dip, you know, we like last couple of days ago.
Yeah.
You know, I'm just like, guys, I'm fine. It's
Buying
relax,
opportunity.
Enjoy, buy Ethereum and Bitcoin.
Yeah.
I mean, that's what I did.
If you have the dry powder for it, jump on it because they last less and less time each time. These dips.
Nuts. I knew it was gonna bounce so hard.
Yeah.
Yeah. We caught it like right there.
Yeah, but even then, it lasts like 12 hours.
Yeah, you can see when the selling just kind of dries out and you're like, all right, it's going to pump now.
Yeah.
Guys, if you like what you are hearing, please like and subscribe to our channel. It really helps.
We never say this in the video.
We never say this, but because we don't want to bug you, we just want to give you like good stuff. But it really actually helps our channel so we can reach more people so that people can actually retire and stuff. And that's what we want to see. So.
Yeah. Okay, next question. How can we mentally start to value crypto for crypto instead of always viewing it as a value against fiat? What will be our options if we want to keep our crypto instead of selling for fiat? How does owning crypto increase our wealth if we hold on to it versus selling for fiat? Now for me, this is an obvious one, utility. Already, you can use crypto, just the base layer of being a cryptocurrency, a peer-to-peer decentralized currency outside of the control of a government. You can send it anywhere across the world, any time of day, any holiday, to any person that you want if they have a wallet to receive it. That's got a ton of utility in itself. And obviously with everyone still valuing generally crypto, and not everyone, most people are shifting over to valuing in terms of Bitcoin. But this whole concept of valuing in terms of fiat, because ultimately you want to cash out into fiat, is just evidence that, there's not as much literal adoption of crypto being used as compared to adoption of crypto just like to speculate on the prices. That day will come because what we're seeing being built now, what you're witnessing with things like DeFi, things like privacy coins, things like self-governance, staking coins, and passive income. It is such a cool thing to see develop, but it's not there yet. It's not the most user-friendly. It's not the most widely accepted by merchants. There's still like hundreds of thousands of merchants that directly accept Bitcoin. But anyway, that's what you're gonna see is like what we've decided with Bitcoin at least is that we're never gonna sell all of our Bitcoin. We're never gonna sell a majority of our Bitcoin because we know that we will be using that for the rest of our lives. Whether we're using it as collateral to take loans out, to get liquidity from the value of our Bitcoin without losing the position that we have within Bitcoin. And that's the same for like a lot of these privacy coins as well, like Monero, Ethereum as well. If you want to participate in DeFi or Ethereum network, you're going to have Ethereum to pay for your gas fees. There's already a lot of utility for crypto. Maybe people aren't realizing it, but what do you think? I just keep ranting about it.
I mean, I think that, the reason why we why we talk about Bitcoin and Ethereum or whatever in dollar terms, or it's just because that's what most people are used to. And since we are trying to reach out to the masses as much as possible, they're not going to understand what sats are or whatever right now. And that's going to change the more that we see this space evolve. I think it's going to be easier.
Okay, next question. This person actually included some specifics about the value of their portfolio that they're dealing with. And for anyone who's new to crypto, this is me being in mom mode and recommending that you never disclose how much money you are dealing with because you are making yourself a target for a hacker. You're pretty much telling how much money you have, especially if it's in crypto. It's potential for them to do a phishing attack or do a targeted attack on you specifically based on your likes and interests and giving you a faulty link and then convincing you to send them your private keys or whatever. Just don't do it. Protect your own privacy. Anyway, this question, we started investing in crypto 3 months ago. We put down about blank amount of money. Our portfolio is around more than 3 times that. Mostly high cap altcoins, only a fraction in Bitcoin. Rumor says there will be a serious dip in the summer before final run. Do we cash all, wait for the dip, and buy before final bull run in December, or just hodl until the end of 2021? We are planning long-term investment, not just in and out crypto income.
Well, first off, I've heard that there's going to be a serious dip for a long time now.
Yeah.
Hasn't happened really yet.
Yeah.
A serious dip? I mean, a serious dip. If you guys want to talk about a serious dip, 2017 had 6 times during the bull run, it had 30 to 40% drops. And so, I mean, I also experienced almost 100% drop when it went from $70 up to $1,150 back down to $70. I'm
Back in the good old days.
Wow.
That's a real volatility.
But I mean, that's some serious volatility. Guys, just to clue you in on something, I haven't actually seen it really dip. This is pathetic.
Yeah.
Like if you guys can't hold on to these pathetic dips, like barely a dip, guys, like come on.
Yeah.
Like get some strong hands and hold on to these things because take advantage of these things, okay?
The kids on social media are calling them paper hands or diamond hands, not just weak hands or strong hands. So, do you have paper hands or diamond
paper hands dumped in water?
Anyway, yeah, the whole okay, so there's that. Number 1, being able to time the dip if you're a new investor, good luck. Number 2, dips are lasting shorter and shorter periods of time. So unless you have your funds ready to go on the exchange with ready to click on that buy order, good luck. Also, the fact that you're saying you're planning on long-term investment, not just in and out crypto income, that to me, okay, cool. Then figure out a way to earn passive income that isn't exiting and entering back into positions, again, trying to time the market. You can allocate some of these funds to staking. You can do so yourself very easily. A lot of different coins are very user-friendly to stake using Ledger and Ledger Live. I've done tutorials on that, so I encourage you to check that out. Also, so then you can use those staking rewards to enter positions instead of trying to, skim off the top of your profits and then re-enter when the time is good to buy. Because like we said, it's often volatile on the top and then the dips aren't so apparent. So yeah, if it's a long-term investment, then just chill and enjoy your long-term investment because it will be profitable long-term. Yeah. It has so far, and I don't see that changing anytime soon.
And if you want to have fun, sign up for Patreon, and I'm getting into different coins that I view as really fun coins. Some of them are very risky.
Most of them at this point are very risky because we have that foundation that we're so comfortable with. We're like, okay, we have some dry powder in this situation. What can we see? What can this do?
Well,
it's very non-stressful.
There's level of risk. There's levels of risk.
Yeah.
I could go on and go ahead and purchase, some, what was that? The Shiba coin or whatever. Guys, I'm not going to do that. They can enjoy their gains or whatever. I'm here for at least projects that have something going for them.
Yeah. More than a meme.
Yeah, way more than a meme. I'm not really into memes. For coins, I am for otherwise.
Next question. I've been reading stories that governments are going to develop their own versions of digital currencies. First, I appreciate you call it digital currencies, not cryptocurrencies, because there is a difference.
Big difference.
First, China. Now I hear the U.S. is looking into it. Also, Europe.
Yep.
Any thoughts on how this might affect the crypto markets?
I think it's going to dissuade a lot of people from getting into their CBDCs or central bank digital currencies because, they've kind of spilled the beans. A lot of the central banks around the world Even like the head of the Bank of International Settlements, I forgot that big guy's name. Yeah, so he's like, yeah, we want to get rid of privacy because there's too many,
Drug
bad
dealers.
actors out there. Like, come on, really? These guys are just total liars. That's all they do is lie. And so these will be able to be shut off if you misbehave or whatever, and your social credit score sucks or whatever. We'll see you later credit, you're not going to be able to access your CBDC. And then how do you buy anything?
Yeah, there's a lot of crazy things that a government can do when they can electronically design how their currency functions more than just from point A to point B. China was talking about putting an expiration date on their coins if the economy ever slowed down too much to inspire spending and to loosen up the economy a little bit, which is crazy. Imagine you have been saving and you're finally at the point of retirement, and then they put an expiration date on your cash and you have to spend it. Otherwise, it's worthless.
Yeah.
Talk about being in a rat race from hell. But anyway, how this will affect the crypto markets, number one, I'll be super interested to know if you will be able to trade these CBDCs on centralized exchanges or on any exchange for a real cryptocurrency. Because if that's the case, people are going to be running so hard into this free market of real cryptocurrencies, not these CBDCs, in my opinion. Yeah.
They're total garbage. It's centralized. You don't know what the supply is. It's going to be non-transparent as you can possibly imagine.
Yeah.
And it's going to be so Orwellian that, I mean, if you are slightly awake at all, you're going to run to the hills.
I also read that China, in addition to that expiration date, they were going to somehow prevent or threaten, obviously, anyone who created like a Chinese yuan CBDC stablecoin. Like how, there's Tether, USDC, whatever. Like, you can't even create a cryptocurrency representing the digital currency of China to be used on cryptocurrency markets. So whether or not it's the actual digital currency, obviously they're not going to allow the actual thing. They're not even allowing an imitation of a thing on it. So that's where they're going with it.
Yeah. Skip that.
Also, here's a good one. Okay, so these are AMAs, right? Ask me anything. Anything. Obviously, a lot of people are really interested in cryptocurrency, but we have, especially because of Toby, we have a particularly interesting life with surfing and traveling and all this stuff.
Sure.
So here's the question about that.
Toby, have you ever encountered sharks when surfing?
Yeah.
I did. I was in Indonesia once, and I was surfing off of East Java, which is kind of like a national reserve. And it was a really big day. I was with a couple professional surfers, and it was just three of us.
When was this?
Oh, gosh. It was back when I was like 20-something years ago. And yeah, right. And so I saw a tiger shark swimming. It was kind of swimming towards us. It had its dorsal fin out in the water. And then the guy that I was with, his name is Garrett McNamara. He's a big wave guy, and he said, we have to get out of here. So we swam in. We didn't even catch a wave. We just swam straight in over the reef. I almost lost all my fins, got cut up a little bit, and so did his brother went in. And so we told everybody at this camp that we were at, and nobody believed us. So about 5 hours later or something like that, they all paddled out for an evening session. And then they quickly went in. And then they're like, wow, there was actually a shark. So that was my shark story. The other story is that I was in West Australia. I was surfing with this girl. And so we paddled about a half a kilometer. We paddled about a half a kilometer out to sea to catch some really big waves. And all of a sudden, I'm sitting on my surfboard, and I see this thing. I'm like, oh, it's a whale that's next to me. And then I realized, oh my gosh, that's a shark. I don't know what type of shark it was. And then I started swimming. I'm like, you guys, you have to swim into the girl. She panics, falls off her surfboard. I'm like, oh my gosh, I'm going to have to tell our parents how she died, because this girl's going to get eaten. And then we finally made it inside. And that was the last time I surfed with her.
Jeez.
Yeah.